Welcome back to the Gold Mining Expert Trading Journal series. Today we're diving into a highly requested explainer, and we're taking a purely data-driven, documentary-style approach. We're cutting out the noise, no hype, no aggressive promotions, just a calm, methodical look at real market data. We really want to unpack the mechanics behind a genuinely sustainable strategy, looking straight at the raw performance reports to figure out exactly what's going on under the hood.
Right, let's get right into it. Today's spotlight is on the GoldMining Guardian, specifically the Conservative Growth Series. This is MetaTrader 5 account 37289911. And what really makes this account stand out in an industry that's honestly quite obsessed with overnight success is its strict mandate. The whole philosophy here is engineered around one thing, prioritizing stable, long-term compounding over aggressive short-term flips. It's built for the marathon, not the sprint.
So for our data-driven breakdown today, we're going to cover the overall account summary, jump into a growth trend analysis, run a balance and equity check, define the risk management profile, and wrap it all up with a transparent final review.
Let's start with Section 1, the overall account summary, or what we like to call the macro proof.
72.89%. Just let that sit for a second. Over the documented period we're looking at today, this account has pulled in nearly a 73% total gain. And if you've been around the financial world for a minute, you know that hitting a number like that without exposing the capital to catastrophic, blow-up-the-account levels of risk is the ultimate balancing act. It definitely builds some serious anticipation for the underlying metrics.
Let's look at the raw data. Reviewing the unedited MetaTrader 5 summary report, you'll notice the absolute clarity of the numbers. The starting deposit was exactly $2,500, and tracking over to the total net profit, we're sitting at $1,794.65. This is exactly what disciplined execution actually looks like from a macro level. When we translate these metrics, the system's true strength really shines through. We're seeing a profit factor of 2.01. Simply put, for every dollar this strategy loses, it brings back over $2. But what's even more impressive to me is that recovery factor of 9.6. That is an undeniable indicator of long-term consistency. It means the system is overcoming its drawdowns almost 10 times over, resulting in incredibly smooth, reliable balance growth. Moving on to Section 2, the growth trend analysis. Let's look at the micro details.
The growth and drawdown data really illustrates the journey beautifully. Just take a look at the consistency of that upward green trend line, climbing so smoothly to that 72.89% mark. But what's absolutely crucial is the red line right below it, the drawdown. Notice how remarkably flat and controlled it stays, peaking at a minimal 5.9% on the specific tracking metric. That massive visual gap between high growth and low drawdown, that's the unmistakable signature of premium account management.
And let's see how this compounds on a monthly basis, because this steady, undeniable monthly growth is where the magic happens. January kicks off with 6.93%, then February accelerates nicely to 16.38%. Followed by a very solid 13.84% in March and 16.45% in April. May is currently sitting at 4.8%. By successfully avoiding those massive equity collapses that wipe out so many traders, the strategy just keeps securing these consistent brick-by-brick monthly gains. All right, on to Section 3, the balance and equity check. We need to analyze the separation here. As you know, in the trading space, the relationship between your closed account balance and your floating real-time equity tells you basically everything about the actual stress an account is enduring. Examining the balance versus equity graph, the interplay is incredibly smooth. The blue line is our closed balance, and the purple line is the floating equity. Look at how closely that purple line hugs the blue line over the course of the entire year. There is very little deep separation going on. The equity practically never severely disconnects from the balance, which tells us that floating losses are being kept under relentless control.
Exactly, and the psychology behind this metric is what we call controlled exposure. Maintaining that tight equity separation proves that the system is using gradual, methodical scaling. It is absolutely not relying on reckless lot escalation or crazy panic recovery tactics when it enters a drawdown. Having a tight equity curve is what prevents investor panic, and it perfectly reflects a highly sustainable, institutional-grade approach to the markets.
Next up is Section 4, the risk management profile, where we define the system's absolute limits. Bringing back the unedited summary report, let's focus on the right side where the defensive metrics live. This is really the engine room of the account stability. We want to look specifically at the max drawdown, the max deposit load, and the trade frequency stats.
Breaking those down, we see the maximum drawdown ever experienced was historically capped at 18.49%. But check out the deposit load. It is an absolutely microscopic 2.33%. Now, the system is executing an active 41 trades per week, with an average hold time of about 1 day and 20 hours. But executing that many trades while committing barely over 2% of the account's capital at any given moment, that is exactly how you perfectly balance trade frequency with ironclad risk control.
Which brings us to Section 5, Transparency and our final review. Let's get to the verdict.
Now, as always, transparency is our foundation here. This explainer is intended purely as a transparent live trading journal. We need to reinforce that the data we're looking at is from a real live MT5 account, meant to document how this strategy behaves over time. Trading inherently involves risk, and past performance does not guarantee future results. Our objective today is simply to analyze the historical footprint this strategy is leaving in the market.
And when you evaluate that historical footprint, the verdict is incredibly clear. The GoldMining Guardian is a definitive model of controlled compounding and disciplined account management. In a broader market environment that is usually filled with aggressive, totally unnecessary risks, this account stands as a true bastion of stability. It proves that having patience, keeping a low deposit load, and maintaining high recovery factors are the real drivers of sustainable long-term growth.
Thanks for joining us for this documentary-style review of the GoldMining Guardian. We'd love to invite you to subscribe and follow along with future updates as we continue to track this specific account's journey. As we wrap up today, I'll leave you with a question. When it comes to your own long-term market exposure, are you prioritizing fast thrills, or are you focused on building an undeniable fortress of compounding data?